For more on ongoing trade tensions between the U.S. and China and what this means for the global economy, we're joined now by Yan Liang, live from Portland. She is an associate professor in economics at Willamette University. Welcome, Yan. Thank you.
Thank you.
The United States made good on its threat to impose these sweeping tariffs on Beijing, putting, as you know, that 25% border tax on $34 billion worth of Chinese goods. China also responded with the $34 billion on tariffs. What's the worst case and best case scenario you see moving forward?
Well, President Trump already pledged another 10% of tariff rate on $200 billion worth of Chinese imported goods and services, and that would be effective at the end of August. And Beijing has already released a response on July the 10th, and it basically talked about the fact that, Beijing does not want to have a trade war, but it's not afraid of having one, and it's going to retaliate at all costs. So going forward, it's likely that, both countries will increase the tariff rates and maybe implement some other non-tariff trade barriers. And also probably from Beijing's point of view, they might actually tighten some regulatory measures on businesses, making U.S. multinational corporations, live a bit harder in China.
So, Yan, do you think this is just a question of who is going to blink first? Who's going to give in first?
I think so. I mean, no one really wins from a trade war. So the point is, who loses less. And from right now, it seems that, the trade activities has still been, pretty active. But China seems to have a stronger reaction so far to this trade war. Its stock market has lost about 2% of value since the trade war started. Its Chinese RMB has lost about 3% of its value, and so on and so forth. And China relies a lot more on exports to, provide demand for its economy. So I would say at this point, China is sort of at the weaker side. But at the same time, China has reduced its reliance on export to generate demand, since the global financial crisis, and the global demand weakens. So if you look at the numbers, last year, trade actually only contributed about 0.6 to 3 percentage points to the GDP growth rate. That said, I think, this trade war will interfere with China's Made in China 2025 strategy. And so I think that would be a significant problem for China.
So is it too soon to say which country this is impacting the most?
Yes, I think at this point it's way too early to really have a very comprehensive assessment. I mean, the United States definitely did not come out or will not come out of this trade war without, scratched. The consumers are going to foot the bill. They might likely to see, prices increase on the consumer goods. Some estimates would put the number to about 1 percentage points increase in inflation, which is significant but not, intolerable. Producers equally are, suffering some losses because a lot of them rely on Chinese imported, inputs. So I think the United States would also have some, significant impacts.
So let's say hypothetically, Yan, that China offered to buy more U.S. farm products and even help more on North Korea. Do you think that this would be a key negotiating point for President Trump?
I think so. I think we all know that, President Trump is probably just having, trying to throw a good show in his political theater. So he wants China to make concession on certain things like the trade imbalances, like the intellectual property rights protection, like the denuclearization in North Korea. It definitely needs, China to give him some concession to show its political assets. So I think that, yes, it will try to make China purchase more from the United States, which I think it's arguably difficult because the United States is already, at the almost full capacity in employment and production. And now if you wanted to sell to China, $200 billion worth of goods and services, where does the U.S. come up with that production capacity?
This could also hurt President Trump politically if key states are affected with job losses, specifically the farmers.
Right. So I think, he has been talking about, this is to promote the interests of farmers. He was at Brazil, and then he's still tweeting, on July the 11th and thinking about the farmers. But the ironic thing is the farmers are the ones that are victimized in this trade war. If you look at, pork imports, soybean imports by China from the United States had declined. So, I think even though there's still a lot of supports for his vision and intention of, getting a good deal with China, a lot of the people, a lot of the Republicans and his political base would disagree with his strategy at this point.
Well, Professor Yan Liang from Willamette, always great to see you. Thank you so much.